In today's video, we're looking back at this crazy week on Wall Street with the short squeeze and companies like GameStop. We're asking the question, when does investing start to feel more like gambling? I'm Michael Parks, helping you to invest in apartment buildings to live life on your own terms. Here we go. There's no question that Wall Street has been a great place to invest your money over the long haul. However, one of the challenges can be that it can be very volatile, sometimes with wild swings up or down in a matter of days or weeks. Nothing exemplifies that better than the craziness we saw on Wall Street this week with companies like GameStop. GameStop is a brick and mortar based business, largely in malls. Mall traffic is down and retail in malls is a tough place to do business. But on top of that, GameStop sells video games. And today, those video games can all be downloaded directly to people's consoles and PCs and other gaming devices. There's really no reason to go to the mall and buy a game anymore. For that reason, GameStop was a favorite of what we call short sellers, people that are betting that the stock will go down. However, what happened is a small group of people within the Wall Street Bets group on Reddit got together and, well, they felt that the institution of Wall Street was out to get them and it was time for them to take some of their revenge. So what did they do? They got together and they drove the stock of GameStop higher. What that did is caused those hedge funds that were short selling on GameStop to have to cover their losses. And so they would therefore buy more GameStop stock, causing it to go even higher. This stock was at $20 a share or less just a few weeks ago. It soared to nearly $500 a share. And at the end of the day, is GameStop really any more valuable than it was? It's still a mall-based business with a dying business model. That starts to feel more like gambling than investing. I think GameStop is just one example of some of the craziness on Wall Street of how fortunes can be made or lost in a matter of days or weeks. But what can you do? Everybody knows you have to be invested or your money will never keep up and grow. I subscribe to the theory of a diversified portfolio. And I think that a diversified portfolio, even if it's in Wall Street stocks, bonds, mutual funds, maybe split across different geographies, is not diversified enough. I prefer to diversify some of my portfolio into alternative assets, specifically apartment buildings. One thing I love about real assets like apartment buildings is that they are based on an intrinsic value. It's land that you actually own. It's buildings that cost money to produce. And that creates a much more stable asset than the whims of Wall Street and the sentiments that can drive prices higher or lower. Real assets are also illiquid, meaning it's harder to buy or sell them. You can't do it on a whim like day traders can and move with the sentiments of the day on the market. Instead, if you buy the right real estate and you manage it effectively, you can reap the benefits of the cash flow from that real estate every month. And over time, real estate has proven to be an excellent investment opportunity to grow your capital as well. I know that real estate will never drive those thousands of % return that some people saw in GameStop this week, but I sleep a lot better at night knowing that my investments are based in real assets with an intrinsic value that I expect to grow over time. I'm going to leave the gambling for when I go to Vegas. If you want to learn more about investing in real estate assets, I invite you to download my ebook, The Insider Secrets to Real Estate Investing, to live life on your own terms. In it, you'll discover how just saving more won't deliver your financial freedom. You'll uncover the 5 secrets to cash-producing investments, and you'll learn how to structure your next investment to create true freedom in your life.